All right, guys. So let's get into IWM. For all of you who don't know who IWM is, I thought it was a very important name to bring up as far as interest rates are potentially coming down, third interest rate cut. A lot of you don't know this, but my background comes originally from the mortgage and the real estate business. So very much always monitored interest rates with regards to mortgages and real estate. It's a very, very important, segment of our economy. It affects inflation. It affects everything. IWM is a index that is the iShares Russell 2000. What is the Russell 2000? They are small caps. What are small caps? So small caps are stocks that range between $300 million and $2 trillion. Okay. So when you have a stock that's not large like Tesla or Google or any one of those super large names, and it ranges between 300 million and $2 billion, it could fall under the Russell 2000 index, right? Why are interest rates important for the Russell 2000 index? Well, if you're a small company, you don't have the same cash flow as Nvidia. You can't just buy 10% of every new company every month that you like. You have to manage your money well. And based on your income and what your company does, interest rates matter. I own a business myself, several. And when interest rates are low, like when the SBA was offering, those pandemic loans, I jumped right on it to get a low interest rate loan so that I can use that money to invest in my business and create more wealth, right? Generate more wealth, hire more people, buy more leads, whatever that is, whatever business you're in, equipment. So in the IWM, you have 2,000 companies. These smaller companies have much higher growth potential, but are also have more risk and volatility. So I figured it would be a good name to really jump into because, we're going into a potential rate cut. And I believe that this index is going to grow and exponentially over time, but it's at a higher risk level. If you looked at it in the past, when the small caps got hit, they got hit very, very hard. You know, IWM is a very popular exchange fund. They're launched by BlackRock in 2000. And like I said, they have approximately 2,000 small cap companies. Um, you know, I don't know if you guys, do any of you guys follow IWM?
Yeah, but I don't really trade much of it. It's at this economy, it's really not very, they don't do very well when the economy is pretty good. Um, just like Tamir said, the 2000, Russell 2000 does very well when the economy is expanding, interest rates falling. So if we head to that direction, then yes, that definitely. But technically, it's bullish, but we'll go over it when Tamir talks more about the Russell 200. Also,
Yeah, so
when the
some of the companies in
Mhm.
IWM, Mary asked that I go over this because sometimes, you've heard of it, but you don't really know what's in it, right? So I'm going to name some names and all of a sudden you'll start to get it.
Yeah,
So you
but
got,
Tamir, give me 1 second. Explain to
sure.
them the difference between the 200 and the 500. There's a Russell 2000 and the SP 500, right? And there's also what is it, the 5000? Is that the one? No, I'm sorry, the SP 500 and the Russell 2000. Explain to them the difference, Tamir.
Oh, there was the S&P 500 and Russell 2000. So the S&P 500 are their Standard and Poor 500 biggest companies. They're large. Amongst them, you got Nvidia, Tesla, all the big boys. In fact, Nvidia takes about 8% of the company, and the all the top names, which is why they affect the SPY so much. I don't know if you guys were in Josh's live session when all the top names were going down, but the SPY was going up, and people were saying, "How is this possible?" Well, they account for 20 to 30% of the SPY, but the other 70% is another 480 other companies, right? Amongst them, very large companies. Tesla was recently added to the S&P 500 if I'm not mistaken, it was last December or the December before, not too long ago. Right now, there's speculation about SoFi and MSTR, right? MicroStrategy, because you need to reach a certain size and a certain income potential to get added to the S&P 500. They have strict guidelines, and they'll add you if you meet them. But a lot of people are on the list right now. The next set of potential add-ons will happen this Friday after hours, which is in one of my videos. I mentioned that because SoFi had run up and it run back down, and it could be a good catalyst if SoFi gets added. They've actually met the requirements as of September, and MicroStrategy did earlier. So that's the S&P 500. Those are pretty powerful companies, right? If you think about opening a business and you're worried about risk, right? Well, what if you were partnered with Elon Musk? Would you feel safer? What if you were partnered with Nvidia? Would you feel safer? Of course you would. And when you invest in those companies, you actually are a part owner of that company. A very little owner, but you're still part owner of the company. So it's these are companies that are safer because they're stronger. They have massive cash flow. They get traded by large institutions in huge numbers. When you saw Nvidia bleed out, $20, which was roughly $500 billion in money,
I have
it
to
went
go
into
to.
Google, right? And Google flew up. So those companies tend to have some kind of rotation because big institutions tend to like to buy into big companies, right? As a big part of their portfolio. It's a very stable. Whereas IWM is where the real money often is made because these small caps, when they pop, you get much bigger gains, but the risk, percentage gains,
Higher.
but the risk is much higher. I'll give you some examples
It
of
wasn't any box.
what's that? Is that a question or just someone not muted? Okay, so I'll give you a few examples of some tickers in IWM. So it's really important to know this stuff. So you've got, IONC, right? Everybody heard of that? The information technology company. Everybody's heard of Oklo. That's in there.
Rocks.
HIMS, that's an IWM company. You've got, a
Rocks
bunch
also.
of biotechs and pharma companies that are in there. CRSP, a therapeutics company. You've got, trying to think offhand, there's so many. I mean, you could type it in and you could look it up. You'll see there's probably a lot of companies that Lemonade, that Josh was talking about not too long ago. They're in there. Rocket Mortgage. I'm a big fan of that with interest rates going down. That's an IW, that's in there Russell 2000. So you got a lot of these companies that if you've looked at the last 2 years that have taken big dives and dips and they haven't climbed back as much um, as the big boys, right? When the market's the way it is, because we want to see the SPY go above 685. We want to see bullish momentum. We want to see a real bullish continuation in the market, and then these small caps tend to run. You got Sunrun. You got a lot of big companies. Okay, so like they're between 300 million and $2 billion. They're not pink slip companies. They're not tiny IPOs. They're companies that have reached a higher level of size, big enough, and they've met the requirements and they've held somewhat stability, and then they get added to the Russell 2000. Some companies get delisted from it, and other companies get added to it. So it's a strong index as a whole because if you were to invest in, you know, two of your friends' businesses and they did well, you might make a lot of money. But if they didn't do well, you'd lose all your money. But when you invest in the IWM, you're investing in 2,000 companies. So you got a nice basket of all different companies, and they're all going to benefit from interest rate reductions. So if the Fed cuts rates, let's look at Mary, why don't we look at the chart for a second and show them where IWM's been the last few days? That way we can
Sure.
give them an idea.
Yeah, but let me just give you guys a summary of what Tamir is trying to explain to you guys. In short, so the Russell 2000 is small cap, SP 500 is a large cap. Russell 2000 is very risky. It's more volatile
Small
compared
cap.
to S&P 500. So S&P 500 is more stable and lower risk. Okay, so when the Russell 2000, they actually do very well when there's an interest rate cut, strong economic cycles, and then the SP 500 is a long-term consistent return. So you just have to know which stocks S&P 500 or is it the Russell 2000, the one that you're investing in or trading with, you know? So those are the things that you got to have to keep in mind. Okay. So let's go ahead and let me go ahead and share my screen. I mean, it's always good to give you guys a short summary of what Tamir is saying because I think repetitive is always a good way to
No,
teach.
for sure. Me and Mary have different ways of talking, and between the two of us, I think we hit most of the audience together. So,
Well, I like it short and simple. Tamir elaborate everything. So I'll just have to make sure I get all the information that needed and then I have to share it to you guys. But let's go ahead and take a look at can you guys see my screen?
and I'll respond to the chat while Mary's talking for a few that have been asking some questions, so we can really want to give you guys full interaction.
Absolutely.
Yes, we can see your screen, Mary.
Thank you so much. So as you can see, yes, we tend to be vacillating first. Just see it first. So we don't really have, if you take a look at S&P 500, right? We have like a very short pullback, and then run, pullback. That's S&P 500. But if you take a look at IWM, it's not like that. It's run and then consolidate, right? And we consolidate and then run, but the run or the rally is not as strong as the S&P 500. Why? Because these are small cap and we base it upon economy. Right now, we're just basically vacillating back here. We do have a small pullback if we make this really strong. A small pullback, a little rally, creating a new higher high, and then pull back to the support. So if we continue, if the Fed said we're having a cut rate, and then give me 1 second, it's clean up really good. Tamir, you want to mute that?
Muted. Sorry about that.
It's okay. Just give me 1 second, guys. We are pretty bullish moving forward at this moment. Let me just count how many rally we had. If we count this 1, 2, and then vacillate from here, your top resistance right now will be like 252 to 250 to, yeah, 252 to 254. Right now, it does look like we're going up. We do have a morning star pattern in here, and that is bullish. This candle is not done yet until we got one more day to after Friday. Then we will see this bullish candle completing and probably testing that 252. But once we create a new higher high, there is a higher probability we can create and touch that 269 to 270. If momentum continues, the volume is not picking up yet at this moment. I think we're just really waiting for that news. If the momentum continues, that we could see IWM go up to 269, 270, 280 to 282, 285 to 295. But at this moment, what are we creating? We are not confirmed with the bullish move. Volume is still not up there yet, but if we take a look at the daily is forming some type of inverse head and shoulder, right? It's right here. This is let me just show it to you guys. This is your first shoulder. This is your head, your lowest peak, and we have the second shoulder forming. This resistance right here is a pivotal point. It will tell us if we're going to break out of that resistance and then create a new higher high and confirm our inverse head and shoulder. And the good thing about this pattern is your shoulder is actually higher than the first one, than the previous one. So that gives you more of a conviction that, hey, we just actually create a higher low, which changes the structure of this possible trend to the upside, right? So we had a slight higher high here. So if we have higher high, higher low, and then we create another higher high here, then that's continuation of the bullish move or bullish structure. But let's take a look at and if we do happen to reject that neckline, which is that 252, 254, your next resistance obviously will be right here. This will be your local resistance at this moment, okay? And then we're gonna have a possible reaction on this one. And then here. So these are the three possible pullback if we rejected this top resistance here. We're not even looking at the EMA yet. Let's see where that thing is going. And as you can see, the volume is still not pretty high. There's no spike in volume. So we're going to see if there is a breakout on this resistance here, we would like to see a spiking volume, just like what we saw here, right? And this is what we want. We want spiking volume to confirm the breakout. Otherwise, if this candle just continue to go up, but there's no volume, it could lead us to what? A fake out. Right? As you can see as well, your RSI reached the last time it reached this about 60. It's not even 60 yet, 59.78. It reverses. So hopefully it will not follow the last RSI that we had here before. Hopefully it will continue to rise up and continue to go up. And these are the possible level where RSI could reject. Right now, there is no conviction. I mean, there is no breakout yet. Volume is still pretty low. So now let's take a look at your EMAs, right? We always need to take a look at our EMAs. Why is that? Why do we always need to watch our EMAs? Because EMAs will serve as a hurdle, a possible short hurdle. Right now, we are above the 8 EMA, which is bullish. But let's take a look at the weekly, another one. And when we see the 8 EMA, the 13 EMA are all aligned together like this is a strong move to the upside, right? So our EMAs are now aligned on the shorter, not even a shorter time frame, because the shorter time frame is already aligned, but on our short EMA, the longer EMA, which are the 50, are also aligned. So we have the 50, 100, 200. When all those EMAs are all aligned, those are bullish. Your 8, 13, 21 are aligned on the weekly. That's a bullish signal. When all your EMAs like this are bullish, right? If you see your 50 EMA crosses below 100, that's starting to be bearish. Luckily, we did have a slight death cross in here, but did not really give us like a long way to go down. We just vacillate and going around and up and down around the 200 until we confirm a golden cross and move to the upside. But this golden cross and the death cross, it tends to react so slow. The candles will be climbing up and you're just experiencing a death cross. So yes, it gives you like a conviction when there's a death cross or a golden cross, but sometimes the candles tends to react slower than that. They could be rallying and you still have that death cross. So these are bullish signal. All EMAs and MAs are bullish. So what are we just waiting for? A full confirmation of the breakout on the neckline, a volume, and the RSI. Okay, questions on that technical? And we also have another one. Did I mention that we have that morning star pattern as well? So there's pretty much a lot of bullish convictions on the IWM. I think what we could get from the Feds is that cut rate when we have that rate cuts, right? Is
Mary,
that correct?
Mary.
Yes.
So, did you get your levels using the Fibonacci?
Yeah, you get levels on these because where's the chart that you're gonna follow? There's really no candles in here, right? So when you try to find all these levels that are uncharted, you use your Fibonacci. Okay.
Yep.
So also, there is an indicator that you could use for those type of Fibonacci. If you don't know how to use a Fibonacci, there is an indicator, but we could discuss that once Tamir finish with his fundamentals, because we still have to talk about Amazon.
No, thank you. I just started Josh's Fibonacci class, so I didn't.
Okay.
I didn't even get into the meat and potatoes of that. So I
No.
just see your levels up there. I'm like, and then I got my chart up, and I'm like, I don't see any past candles up that high. So I figured you used fib somehow.
Okay, there's two Fibonacci. One is the Fibonacci retracement. Fibonacci retracement is used to measure your pullback. Okay, so there's two ways. So Fibonacci retracement is you want to measure how much is that rally and a possible pullback, right? When Russell 200, 2000, yes, had a rally and we had a pullback, it actually respected with that beautiful hammer respected at 61 golden ratio, 61% golden ratio, which most traders would love to enter on that golden ratio, right? But in order for you to find the exit strategy, you don't use Fibonacci retracement because Fibonacci retracement, once again, only measures your pullback. Your retracement, your Fibonacci retracement is only good for an entry.
Oh,
Mhm.
all right. Because I've been in a Lily play and it's up in the clouds right now. And where's it going? But it's pulling back now. But Lily has just been setting new highs. So,
Yeah. Well, Lily is a good long-term investment. I think I did a short on that. What are the good investment? There's Lily, there's Nvidia, and there's Amazon. So Lily is really good. It's a good company to hold on long term.
yeah, but it's just was a play that I just have no idea. I'm learning, but I had no idea where it's going. It's just up in the like right now what IWM is. It's up at a
Don't
point
worry,
where,
Scott. I'll give you levels of resistance on that after Tamir so that we could just focus on what we're talking about. But I'll give you a resistance. I'll put it in the Discord, okay?
sure, thank you.
You're welcome. Go ahead, Tamir. You could.
All right, so before we move on to Amazon, just to go over some quick fundamental comparisons of IWM versus, let's say, the S&P 500, so you get an idea on what the two companies are like and why we wanted to talk about IWM now. So, as far as a PE ratio, which we explained in last week's live session, IWM's average PE is around 18 and a half, right? Which is very good. It's safe, controllable, but they don't have as much technologies for growth, you know, with speculation for them to go as higher as, let's say, big tech, right? Google right now is dominating in the AI space. And if and like Josh put in a recent video of his, he uses all Apple products. So even though Apple's down, like you wake up in the morning, if you're using every one of these products, going forward, it's more than Hims or Lemonade. Like you don't pick up a Lemonade phone or a Hims Google search engine, right? So these companies have a much stronger footprint. So the SPY's footprint on a PE ratio, on average, is 25. We talked about Tesla being over 200 and some of the companies being under, like Amazon, which we're going to get into. But their average is higher, right? Because their growth potential is bigger footprint. Dividends on the IWM are roughly about 1% on average. So if you bought all of the IWM and you had a piece of every company, you'd get about a 1% dividend. As far as the beta, it's 1.28, which means it's more volatile. It has a 28% higher chance to swing than, in instability than the S&P 500. When you invest in the S&P, they say the S&P is the best investment. A lot of hedge funds say because it's solid companies. They're not going out of business. Whereas in the IWM, you have a lot of these companies that one small move could drop them further. Year to date returns are 13% versus over 17% in the S&P. Again, we're not just talking about the Mag 7, we're talking about the whole S&P. Why? Because the SPY leads on tech-driven gains and the IWM benefits from small cap rotation and things like interest rates. So you'll probably see a closer margin as interest rates go down, right? IWM has 2,000 companies in it, and the SPY has 500 large cap companies in it. So those are the basic fundamental metrics. You've got expense ratios. So, for example, IWM's expense ratio is more than double what the SPY's is, which means that cash flow is more important when they don't have money, right? Everything costs twice as much for them. They don't have $50 billion cash reserves like Apple. So when they need to borrow money and interest rates are up, it causes a larger expense to the companies, right? So their expense ratio is higher, and that makes it more risky. So when you own a business and your expenses go down, you can make more money on the business, right? You can generate more income. When your expenses go up, you might fire people or cut costs or do different things to keep the business at bay, which we're noticing in the labor market, right? Didn't they just report less jobs? I don't think those jobs fell from, you know, all big tech companies. I think a lot of it came from small cap companies that can't afford to keep everybody on the payroll when expenses are high. So, with interest rates going down and the IWM rising, there could be some opportunities here in the IWM as a whole. I think it's a great investment. I'm not a financial advisor, but definitely something to keep your eye on. And you can go look in. I recommend everybody looks inside the IWM. You can type into AI, please list all the companies in IWM and pick a handful that you like and chart them yourself and take a look. You might find a few companies in there that you forgot about that have great potential, that have room to move up. Often I pick companies from the IWM, such as Rocket Mortgage or Lemonade, as I picked in the past to get involved in. So that's IWM. Now, Mary, do you want to move on to Amazon? Or you got more to say about the IWM chart?
You summarize everything. You did very well, Tamir.
Well, thank you. Thank you. So Amazon, everybody knows Amazon right now, right? It's lagging a little bit this month. Had a nice run up 2 months ago, all the way to 248 range, 250, something like that, right? And then it it scaled back in November, like a lot of companies did. And right now we're, in my opinion, experiencing a rotation in the big tech companies. You're seeing one of them pop, one of them drop, one of them pop, one of them drop, you know, slowly moving up again. But like many analysts are saying, this is a slow move up. We haven't really hit a level of super duper support. So I would be very cautious. Don't throw all your money in December right now, even though December is usually bullish. You got to be very careful. So, why are we covering Amazon? Me and Mary were talking about it because this is purchase season, right? Amazon's a strong company. This time of year, Amazon brings in more money than most companies do. I
That's
don't
right.
think any of you have not. I would be surprised if any of you have not gone on Amazon to buy holiday gifts or to take advantage of it during Black Friday. And in America, as opposed to here in Israel, Amazon comes right to your door next day. You place the order, and the guy's ringing your doorbell with the package. It's unbelievable. So they've got a great system in place to keep you buying. The consumer always needs to be satisfied, and Amazon does a very good job at that. As far as, holiday sales, they're doing good. Amazon's reporting good sales so far. They have some good technologies on the horizon. They're involved in other things as well. But right now, going into purchase season, we're going to take a deeper dive into Amazon. Amazon's PE ratio is 32 and change, right? 32.82 right now. What does that mean? Well, compared to the S&P 500, they're a little higher than all of the S&P 500, very little. Because Amazon always trades at a slightly higher PE. So you have to do this relative to each, part of the S&P, each the tech sector next to the techs and the energy sector next to the energy names. Each PE is relative to the PEs in its sector. For Amazon, a PE of 32 compared to big tech is not terrible. In October, they were at about 26 when I did a video on Amazon, right? And that's when their price was around 220, 218, right? And we were talking about if it passed 225 and held, 222, right? It would run. And it did. And now their PE is sitting around 32, 32.5, 32.82, depending on exact price right now. It's after market. Whereas the Russell, as we just mentioned, is at 18 and a half, right? But what would you invest in more with such a close PE? Would you be more comfortable being a partner in Amazon, or would you be more comfortable being a partner in Hims? What do you think in a year from now is going to have tremendous growth potential? right?
Hey, don't be
Based on the
knocking
price
on
where
him,
it is now.
okay? Don't be
So
knocking on
from,
him. His fundamental is good for him. Just to let you know, they have good cash
uh,
flow, no very low
I
debt
think
rate.
it's great. I
Yeah.
think it's great. I'm not going to tell people what to invest in. They're both great companies. I mean, but we're comparing a solid
Yes, I
S&P 500 company to a solid IWM company, right?
I
So
agree.
you can go any direction you want. Hims might have more percentage potential. Honestly, they might have a better percentage gain. Is Amazon going to go up 20% and rise right now to $280? Or is Hims going to rise 20%? Right? So it's a big numbers, big discussions. I'm not going to tell you what to do, but Amazon generates a tremendous amount of revenue every single quarter, right? The
Yep.
stock's currently trading at around $2.5 trillion. I remember when it was trading at 1.75 trillion. There was a discussion of it hitting 2 trillion very, very soon. And then it blew past that very fast and went on to 2.5 trillion, right? I always look at Amazon and Google together until recently because they used to look like together they were one group against, Apple or against Nvidia. One company was worth the other two. But now Google is gone to a whole nother level, and Amazon is holding strong at a $2.5 trillion level. By the way, the Mag 7 are about $21 trillion, just so you can understand the massive power that they have in the market. Amazon does not give a dividend, right? Some big companies, they give a dividend. Amazon does not. They reinvest all their profits back into the company. His footprint is that he wants to control the whole world as far as, sales go. And it's not easy because not like Google, you don't need Amazon every day when you're searching. You don't use Amazon every day on your phone. Amazon has to constantly, from a fundamentals perspective, keep the consumer happy. They have to constantly provide you with goods quickly, efficiently, and cost effectively. That is their business model. When he first started the company, he was, there's videos of him talking about like his first purchase in Guam and his first purchase in a third world country. And he did anything he could to get the product there. Now, overseas, I want you guys to be clear, Amazon is still very strong, but you got Alibaba and you've got,
¿Qué usan en Colombia? ¿Amazon?
is Amazon in Colombia? I don't know. Are you in Colombia? Amazon's everywhere, but I don't know if they're dominant in South America. You know, different companies have different trade agreements with bigger
Yeah.
companies, and there's VAT taxes. Going into companies from different places. For example, in Israel, if you order anything over $75, you have to pay an additional like 18% tax on Amazon. So people will order cheaper goods from Alibaba or from Temu, which is another like knockoff version of Amazon, but it works for certain products. They don't do batteries and things like that. It's also what you're allowed to order in different places, right? So, very important to understand that Amazon has a huge footprint, but they don't control the whole world. Their goal is to control the whole world. Their goal is to be in every market and contact every consumer. Their year to date returns currently are just under 6%, right? So they're a little lagging with relation to the S&P at an average of 15.5%, as we mentioned before, but they're strong from a fundamental perspective compared to some of the other bigger names like Tesla, which has huge potential with their technology, but their fundamentals are way out of whack, as we discussed, 200 and something PE. So, Amazon is one company with a tremendous amount of employees. Out of the 2.5 trillion, 21 trillion that are in the Mag 7, Amazon is 2.5 trillion, right? So they are a very strong company. They're a top five name from a fundamental perspective. You want to get into some of the charts on
Yeah.
Amazon?
But let me give you guys something about Amazon too. Amazon is not as popular as Grab in Asia. Like I went to Vietnam and
Right.
I went to South Korea and I went to Philippines and we use Grab. Like when I went there, everything is Grab. And they have the Alibaba, what you're talking about, like Amazon of Alibaba and Grab. So Amazon is not that popular in Asia where I've been. And Grab is a small company, but it's so popular in Asia. You go to Vietnam, Grab is everywhere. You go to Philippines, Grab is everywhere. Korea, Grab, they use Grab. So
I've been
FYI.
hearing a lot about Grab actually. It's
Yeah,
been like almost like a meme name right now.
it
Four
is.
people this week asked me to chart Grab.
Yeah,
And I'm like,
it's actually that's
what's
one of
Grab?
Main Aird's one small cap long term when it was just trading $3 or $2. And but it's a very, very slow move to the upside though. You have to be patient with this because you cannot really scalp it much, so just FYI. Also, additional information, historically speaking, Q4 is always one of the strongest
Yes.
quarter of Amazon. So Q4, so by next year when they file for Q4, this is usually the strongest quarter for Amazon. So FYI.
I wanted to add one more thing about Amazon that I forgot to mention, and it's something I mentioned a few months ago, which is why I got very bullish on it. I took a massive position when it ran up, and then I pulled it off the table before November. They have a massive, massive e-commerce dominance in the market. Massive, not just from purchase perspective. They are the AWS. They have
Yep.
AWS. I
Yep.
don't know if you guys remember the AWS crash that happened recently. People's
Yeah.
exchanges were freezing. My option contract dates when I was on E-Trade were incorrect. They had the wrong dates in the system due to this failure. All these technologies, Canva wasn't loading. I was trying to do a presentation on Canva, it wasn't loading. It had a massive AWS server meltdown, right? But the stock didn't drop. It was the craziest thing. When I saw that, that told me institutions were not ready to dump Amazon. They were not ready. Even though it failed and it was news, they were covering the news up. The failure was on the news for a minute and it was gone.
But
And
that
I
was the week
covered that.
of yeah, that was the week of earnings too, Tamir. So that's kind of
Yeah.
hard to predict when it comes to
Yeah.
fundamentals analysis expecting high on Amazon. So although we have that bad news, but I think the optimistic of the investors are higher than that, which could be solved easily for Amazon. So I think that's
Agreed. And from a fundamental perspective, as I'm here for, you want to see consumer spending. That's what you want to see with Amazon. So if inflation goes down, if there's more money in your pocket every month, if the job market grows, if your income goes up, you're going to see Amazon doing much, much better overall. It does better when you spend more, when its e-commerce is used more, when it grows. Bullish, fundamental analysts are saying 280 over the next, year. That's the general consensus on Amazon with its growth, but it could change very quickly. Let's say interest rates don't go up, people stop spending, they're tightening their belts. Amazon could suffer. They have a lot of employees. So Amazon could be like GE was back in the
Hey,
day when
niña,
they
muy cerca al
cut
teléfono.
cut 20,000 employees, 50,000 employees to balance their books, and the little person gets hurt, to protect the big company, and then their revenue goes down tremendously. So, very important to note. Also important to note, what the work conditions are. They work people to the bone at Amazon. A lot of that stuff affects how people's sentiment is with the stock. Right now, they're in the bull light. People love it. They use it. Nobody's looking at it as the bad boy in town. But you want to keep your eye on the news. You want to keep your eye on the numbers. You want to keep your eye on where Amazon's going. And like Mary said, fourth quarter, they're strong, so they could pump up, but doesn't mean that first quarter they can't scale back, on weakness. It does happen. So let's look at the charts.
Yeah, somebody said, VJ said, what is this meeting about? Like Amazon 60% revenue comes non-retail. You're right. You're absolutely right. 20% year over year is for AWS, right? But the AWS has a high profit margin. What does that mean?
Huge.
What does that mean is they get more profit than the overhead expenses on that. They don't have to pay much compared to retail, but I totally agree. 60% of them comes from retail, but they're one of their high profit margin is their AWS, by the way.
AWS is 31% year over year growth right now.
Oh, is it
So
20?
understand, you're not spending, if you spent $1,000 in the holidays normally, you're probably not spending, 2,000 this year, more than last year with less money in your pocket, right? So unless there's the most amazing Black Friday deal. Whereas AWS, it's growing, just like Tesla's battery business versus their car business, right? Their car business is like, it's growing slowly, nicely, but their battery business, it was 67% year over year. So sometimes it's not what you're thinking about, it's where the revenue comes in. Amazon's got revenue from many different areas. AWS is not just retail based, and they're going to continue to grow. If you look back in 2015, when a lot of these things weren't here, right? When we didn't have AI and people were still using email, so, like um, the Mag 7 and the S&P were much, much smaller than they are now. Like 12 trillion compared to 21 trillion. So why did it grow so much? Did it
Trời,
grow
bây giờ mấy company
because
bây giờ nó chuyển đến trillion không à?
did it
Giờ
grow
không nói chuyện đến
because
billion nữa, nó
you're
chuyển đến trillion.
spending twice as much on retail? Not necessarily. It grew because their e-commerce business grew. It got established. They built a whole new business. Tesla didn't even have battery business back then like they do now. Apple had the same phones, but they were just coming up with new models. They weren't dabbling in AI. Google didn't have Gemini on the same level. So sometimes these new developing businesses that start taking over our lives and the way we operate, such as e-commerce dominance with Amazon, you'll see their growth potential come from different things. They can't rely on the consumer forever.
Let's talk about technicals. We're going to learn Technicals 101 today. So using the weekly chart, we always would like to start with the weekly. Sorry, Tamir, is it okay we share technicals now?
I'd love it. I just muted my mic, so you got the floor.
Okay, sorry. I thought that was a cue when you say so nothing. So, all right. So technicals analysis. Thank you, Tamir, for that great fundamentals of Amazon. We do love Amazon. I think Amazon has become part of our daily lives. I get Amazon here pretty much every day, not for me, but for my husband. It's the opposite. So using the weekly chart, first, let's start with a monthly. If I'm going to share you this, what trend are we in Amazon? Using the monthly. Do you guys agree this is a bullish
An
trend?
uptrend, bullish.
Right.
Yes.
It's absolutely an uptrend, right? Uptrend, we continue to create a higher high, higher low, higher high, higher low, higher high, higher low. Yes, we do have this deep pullback. But you know what's so good about that pullback is we never, well, don't say never yet, we did not create a higher low. So the structure or the setup remains bullish, right? So when we pull back to Amazon, even if we pull back to 215, which is currently right now 231, 230, 215 to 211, that will be your key level of support. Even if we pull back to that level, we still continue to be bullish. And here comes your Fibonacci retracement, right? You measure that and see how much Amazon after a rally had gone pull back. So it retraced multiple times, touches that 211, which is your 50%, pretty much a good pullback, right? So this is why you measure your pullback. You want to see if this pullback is a great pullback, a good pullback, or a shallow or a short pullback, right? So even if Amazon extended to that 200, maybe about 204 to 200, it's still a pullback. It's still a good buying opportunity, right? Not unless Amazon falls below that and then it start retesting the new lower low is actually right here. And then that's when we start creating a higher low, I mean a lower high and then lower low, then the structure changes. Right now, it's not. It's really not. Still bullish. But do you guys notice something looking at your RSI? Do you guys see something unusual on, not unusual, I'm saying like an early signal that Amazon needs to slow down and perhaps we need to do a pretty much longer pullback than this one. We have a bearish divergence on the monthly. And when we see a bearish divergence on the monthly, that is important because somehow this thing could fall. How far? How low, Mary? We don't know. We could only test and at least find out that this is a support. This is a key level of support all the way here because this was a resistance. This was a resistance, which could serve as a pullback, right? How do we know that the divergent had confirmed, Mary? Very simple. Very simple. Just draw a trend line in there. You could, as long as you draw your trend line right on at least the bottom of your wick, or at least they are aligned, the rule of thumb is two touch, touch. One, you could say two, but it's not much. Two, three, right? So you have multiple touch in here. If you see Amazon falls, which pretty much on these level falls below that, our divergence on the monthly confirms. Another thing that we notice is, do you see this increasing price? And do you guys notice our volume has coming down? So there's really something going on Amazon monthly, right? Now let's take a look at the weekly. The weekly, just like the monthly, we have multiple touch on these level. This is a key level of support, pretty much pretty strong, right? So if we fall below that 211, we're going to have a little bit of push down to perhaps around that 200, which could extend it a little bit to 197. 200 to 197, if we cannot hold that 211, what is that? 211, let's say 210 psychological of support, right? Could extend to that. And we have a mini gap from 197 to 194. It's only $3 difference. If we cannot hold that 194, obviously the real support lies on that 161, 153. But Mary, I thought that Q4 is one of the bullish and healthiest quarter. Yeah, absolutely. I totally agree with you. But this monthly bearish divergence, we just have to keep it in mind. We have to put our trend line, draw your trend line in there, because this will guide us where Amazon is going. Is it going to continue to go up and respect this lower trend line? This will serve as your dynamic support, right? As the price continue to go up, we want the candles to be respecting your dynamic support, which is your trend line. Using the daily, on the daily chart, we have a possible head and shoulder forming here, which is bearish, right? We have like a lot of bearish signal here, but they are all not confirmed, right? So this level of support here is really a pivotal point. What does pivotal mean? So this is important, a critical level of support where it could give us a direction to either reverse and go up or break down the support and test our level of support that we have given, right? So right now, there's a possibility of a pullback from here. This is evening star pattern, which could retest here, which give us the neckline of the head and shoulder, right? Let me just see that.
You want to also discuss the levels up and down, like maybe the fib levels, so that they can get an idea?
Sure. Give me 1 second.
Miss Mary, I have a quick question. So, what does it mean when a day candle is showing bearish and the weekly candle shows bullish? Like, how do we understand
They're
that
not
situation?
confluence. It means they're really not confluence. So you have to wait for a confirmation for that.
I see. Got it.
Yeah, so if you see there's a lot, this is like a bearish and then your daily showing bullish, so there's no confluence. So you just really need to wait for that 4 days or one more day candle to finish. And then perhaps we could see a better trend or a pattern perhaps. But right
Uh-huh.
now it's daily is a little bit that bearish, but I know there is somehow there's gonna have a EMAs or MAs somewhere in this level because this is a pivotal level. This is a pivotal point. So it's really important. I'll check it out later. From the downtrend, we had created a higher high and then a higher low, lower high, right? And then after that, we continue to fall. So this rally to the downside had moved about more than 161% Fibonacci extension. This is really a pretty long downtrend for Amazon after that rally of that 260, I think, that 258, yeah. So hopefully this rally to the downside is completed, but we have one, two. Hopefully we don't create another third rally, right, to the downside. Normally, in a technical perspective, we have like 3 rallies. You have 1, 2, 3, and then you end up having that lower high create and then continue to fall. So if we have 1 rally to the downside, we have 2 rally to the downside. Hopefully we don't get a third rally before a possible reversal to the upside. Right now it's still early. It looks like it wants to retest this level of support, but we haven't created a higher high. Top resistance of Amazon still lies on that $250. That's still the resistance. Right now, we're just respecting this local resistance, which was respected multiple times as well on the daily. So this was a resistance, this is support, this is a resistance. So right now we have this Morningstar pattern. This is actually a beautiful Morningstar pattern where there's a gap up and a gap down. That's a traditional Morningstar pattern. Confirms that trend to the downside is if we fall below 231, close below 231 on the daily, then we could see Amazon continue to fall here. We see 269, 270. We could be retesting 222 back to that 217 to 215, which could extend it to here. So we have to watch our Morningstar pattern as long as we don't fall below that 231, and then the Morningstar pattern is not confirmed, okay? But the goal here is to respect, let's see, where's the EMAs here? Okay, right here. This is my 50 EMAs, right? The white line. So in order for us to continue to be bullish, we have to establish and at least remain above that 50 MA, which is about 228, like 227.98. So 228. So we have to be above 228. I said something about right here. This just confirms the Morningstar pattern. But if we fall below the 200 MAs, just like, I mean, the 150, excuse me, the 50 MAs, and then we're going to retest that 200, which is the red line. Same scenario here, right? Hopefully we don't fall below that 150 MAs. They are both aligned, by the way. If we fall that, then anticipate to test at 200 MA, which is our key level of support right here, okay? So your last line of defense is that 228 right here. Your last line of defense, which is half of this candle. So which is almost the top of this red candle right here, okay? So this will help you at least guide your trade, like using this candle here. This is going to be a little bit of a pivotal point. At least will give you a level of support. Last line of defense, Mary said, if we fall that 227 or 228, there's a chance that we could get to that 222, which is good for a put. And then retest 217 to 215, which could extend it to 210 or
I
209.
just want to comment on Mary's technicals for a minute. Spot on, by the way, unbelievable. I I ran these. I ran according to. I use technicals as a guide. I'm a momentum trader, but technicals really run the market. You know, it tells you what levels it things are going to move at. I look at it like a football field sometimes, even though I don't watch sports. You know, you got your Bulls on one side and your Bears on the other side, and each one's trying to gain yardage in each direction. And there are certain, points when you make your moves. So the entry that she showed you at the 219 level, that was the entry a few months ago
Yep.
that I had risen up and we were talking about, right? Right. In September, October, that was the conversation. It had to run up, had to hold that level. And now we're looking at that level again as a
Yep.
potential future support, 2 levels down, right? So we got the 228 level, which was the level we were aiming for when it was 219, right? Resistance becomes support, support becomes resistance, depending which direction you're going in. So right now, it's at a level of support roughly around the 232 range. And if it drops, the next level of support is around 228, right? So
Yep.
we don't want it to break that support because if it breaks that support, that will become the next level of resistance, and the new support level it could go down to could be 219. And then obviously we don't want to see it go further. But unless you're a bear and you're playing puts and you want it to go further, right? So you could play both sides. In fact, I recommend you always think that way because for years all I thought about was being a bull. And then you become FOMO. You're just thinking in one direction. As a trader, especially a technical trader, you can go in either direction. It shouldn't matter to you as long as you know your technicals. You can get in on the upside and you can get in on the downside. If you've ever traded with Josh in the morning scalping, sometimes he's like, I think it's going bullish. I'm going to look for calls. Nope, I'm looking for puts. And he switches right there in like 5 minutes and takes a trade. And I think, in my opinion, tell me if I'm wrong, Mary, but that's like a super important skill to develop that you don't have a bias, that you are looking at it with a level head, not like I love Tesla because I love Tesla, but I don't let it get involved in my trading. If it breaks a certain level, I have to get out. In the past, when I didn't follow these levels and I was just going with hopium and trend or news and I didn't really follow technicals, yeah, I'd get lucky on some run ups when the market's bullish, but when the market's not, you lose your shirt, especially if you're trading options. You lose it all. So it's very important to know right now we're at a key level of support or resistance, depending which way it's going to go. Right now, it's holding at this level. If it dips below, now you got the two lines, and you're looking at the 200 EMA, the 50, and the 20 as your guides, right? When Mary's not around, you set your chart up, and you don't have Mary in your corner right there on the day to day. You set your chart up. You make sure you got your 200. You make sure you got your 50. You make sure you got your 20, your 9. And you got everything set up properly to run these levels yourself and learn to trade with it. Sorry
Mm-hmm.
about that. Just had to
No, that's
interject it.
fine. It's fine. Actually, I think I did a video on that on Amazon when earnings starting. We were watching Amazon and we did pretty good on Amazon. We had a call. We scalped actually Amazon, Tamir. We scalped Amazon when before earnings, and we actually have well, I had one play for Amazon, which is for one play. It gave me like a couple of $1,000 just for one play on the earnings, which is I'm very, very particular on earnings play
Nice.
because I have to see patterns. We have to watch their patterns when they provide their earnings. And most of them, like Nvidia, I did not play their earnings because every time Nvidia exceeded expectations, it always just dropped. And I hated it. And it did to me once. And I promised myself I don't want to do earnings, but I still break my rules. But I did it with APLD. When APLD beat earnings, it always fly. It always flies. So I'm like, I'm going to take a risk with that. So when you guys doing earnings play, you have to watch the pattern of the past earnings. Like you want to see how the candles or how the market reacts when their earnings come. Okay, so you just use at least 3 consecutive earnings and look at the chart. See how they react on that before you start doing earnings play, because earnings is a gamble. Honestly, it's either you win or you lose big time, right? Yeah, you win or you lose big time. That's what it is. So for Amazon, we do have a resistance on that 233, 234. 230, yep, 232 to 235 as the top resistance, which could extend it to that 242, 243. If we break out above that resistance, we are looking, this is going to be a little bit of a hurdle for Amazon to reach that 250. Please note, Amazon doesn't move like Tesla. You could sit on your call and watch Amazon move like a turtle. You're talking
So
about
true.
$3, and that $3 per day, you could actually pull back $1.50 or $2, and then you only get profited for that $1. Because if you measure, this is also class 101. You need to measure your daily candles, especially on Amazon. As you could see, 230 to 233. What is that? $3, right? Let's take a look at the second one. That is 233, 238. Okay, it gives me about $4 or $5. Fine, fine. Okay, 232 to 235, $3. 230, 233, $3. 228, 231, $3, right? Is it right? 28, 29, 30, 31. Yeah, $3. So you guys need to measure a daily candles, and then sometimes it will give you that $5. That's a good day. Maybe the market, it's a ripple effect. Maybe the market sentiment is positive, or it's bullish and Amazon's gonna go up, but your daily candles will at least give you or guide you how much this stocks is gonna go up. Like Tesla. You anticipate Tesla to move at least $10, right? In the good days, 10, $15, sometimes 20, $50, right? So you got to measure your daily candles, okay? So just keep that in mind when you're trading. This goes for all your stocks. Measures your daily candles. That gives you an average. How much can this thing move? Okay, it goes for SPY as well. If you see it exceeded that daily average, let's say $5 or $3, you gotta hold on to it. Maybe there's not enough meat on that bone, right? Maybe it's time to get out on my scalp, or it's time to get out on my daily trade. Maybe tomorrow it's bearish. Guaranteed profit is always better than losing $1. That's just my say on the technical, right?
I also recommend, guys, and this is just from experience. I always say to people, learn from my mistakes so you don't have to make them. And I make a lot of mistakes. I've made a lot in the past, not taking it serious enough, just being loose with money. Pick a few tickers that you like, maximum, I would say three, and
Yeah.
get to know them. Get to know them really well. Like I trade Tesla. I don't recommend anybody trades Tesla. It moves too quick. It's too crazy, but because I trade it every day or every other day or every week, I don't get into a trade every day. But because I watch it every day, it's a better way of putting it. I am very familiar with its swings and its levels, even more familiar sometimes than people that write technicals because I am watching it every single day all the time for 2 years now, probably. I know where it retraces to. I've been in it on its highs and I've been in it on its lows. I've been in it through earnings. I've watched it break levels and bump levels. I've watched it fake out and break out. So it's very important. And pick a ticker that fits your speed. Tesla is very high speed, high momentum. And like Mary said, you know, it can move $10. Nope. What did it move today? What did it move today? It went up to 446 or something from 430. That was a $16 move, right? And then yesterday it was down to 422. So in the day in 2 days from 422 to 440, it's a $24 move. That's a big move. Now, if you went the wrong way on that trade at any point because you didn't have the technicals, you would have gotten crushed. Amazon, on the other hand, moves slower, but you can get crushed with time decay. If you don't know what you're doing, you could buy an option and literally be losing money and the stock's not going anywhere. And that's very dangerous when you buy out of the money calls, especially. That's why I usually recommend beginners always buy in the money calls if you're going to do options trading because it's safer. The time decay is safer. When you buy, if you bought a 440 Tesla call at the beginning of this week when it was, 425, if it didn't rise, you lost everything, right? Of course, if it rises, you make a much bigger percentage than the 425 call, and it's cheaper, but you can't look at the cost of the call necessarily Because that's why you have those like TSLL, like Mary always likes to point out. You can always trade the 2X ETF that's at a smaller price point if you want to get in. But very important to get familiar with your ticker, right? Don't just rely on Miss Mary to throw up some technicals on the screen and then you say, hey, I got in at this level. I don't know what happened. You got to know it changes. It's a moving average, right? So although the moving average, is in the same range, it changes. Tesla was 428 resistance. And 2 weeks later, as it was moving up, that 428 wasn't 428 anymore. The same EMA was now 430. It was a little different. So you gotta have your charts constantly. And if it's the 50-day moving average, right, it's measuring 50 days. So 10 days from now, you got a whole new 10 days and you dropped an old 10 days, right? Same thing with the 9-day moving average. It's only the last 9 days, right? So if from now is what? The fourth. On the 13th, the 9-day moving average that we're looking at now is going to begin, is the old part of it is going to begin now, is going to end now. And it's going to begin, that's going to begin now, and it's going to end in 9 days from now, right? We're looking at the 9-day moving average, the past 9 days, the 20-day moving average, the past 20 days. So very important you get familiar with your tickers.
Yeah. Yeah, Tamir is getting good on this technical now. Sooner or
Getting
later,
better. I'm getting better. I'm
you're gonna
learning from the
take
best.
over. Well, it is 10:10, so we normally have this late night show for 1 hour. I don't know if Tamir wants to extend it a little bit longer. We could take a look at a technical real quick, or we could say
Yeah,
bye-bye.
I think we should ask some questions. It's okay for me. It's only my kids are still sleeping, 5 a.m. They're across the what road? I get this nice time to spend with adults for a change.
That's nice. That's nice.
But I wanted to remind everybody, I put in a link in, and not to promote or anything like that. It's just for your benefit. Me and Mary put together a class that we're going to put in the Discord. A few people have signed up already. We're only doing groups of 20 at a time, so we get personalized attention. Our first class is a level 1 beginners class. Some of you have asked me and Mary to teach. It's hard to do one-on-one, so we're doing a group class. It'll be in Zoom. We'll be able to talk and have a discussion in between technicals and fundamentals. She's going to cover basic like she does here, but on a more deeper personal level, support, resistance, how to read it. I'm telling you guys, I wish I took a class like this 10 years ago. I really do. I would have probably 10x'd my money from where I did. I made so many mistakes, especially during the meme stock, era where technicals would have been very important because it was just ridiculous, right? And fundamentals would have been even more important, which is why I follow fundamentals now because I lost my shirt on a lot of this stuff and I had to make it all back slowly. So very important that you don't fall into that trap. The emotions will ride you in this market and you'll give up, you'll run away. So better to take it slow, get your technicals down pat. That's like learning how to drive a car. If you don't know how to use all the pedals and the doohickeys in the car, you're gonna crash. You're gonna crash, and then you're gonna go, oh, I'm gonna learn from that crash. I'm gonna learn from that crash. But no need for that. Learn your support and resistance levels. Learn your RSI. What is RSI? Learn your MACD. What is MACD? How do you read it? How do you know when to look at one and the other in a chart? How do you know when to compare these things, right? Same thing with fundamentals. Are you just buying something because you love it or that you saw some news article? Well, after you see that news article that says, wow, this is going to the moon, go look at the fundamentals. I have constant fundamental conversations with professionals. I'm talking hedge fund managers, big people about stocks like Tesla and different things because there's big debates about fundamentals versus technicals, right? And I'm not going to judge you or myself anyway, but it's important that educationally that you have both of these skills completely covered so you can make an informed decision. You decide your risk level. You decide how much money you want to risk winning or losing on any trade, right? You formulate a trade plan so you can follow it. Because if you don't have these guides, you're always going to be looking for somebody to tell you what to do. And that's not trading. That's just following trades. That's copy trading. We don't do that here. We're not looking to teach you how to copy trade. We're looking to teach you how to grab this by your own hands and become a pro. I watched so many people in the Discord learn these skills from Mary and Mike and become really good. Like just really, really good. Consistent traders. You know, it's about the consistency. You could trade with $10,000. You don't have to have $1 million. And if you're doing it right, $1,000 a trade, whatever, you could double your money. You can totally do it. You just have to be smart about it. You can't just say, I'm buying this ticker because I think Amazon's going to be big. Okay, great. Then you're not a trader. Then you might as well just be an investor and say, I want to invest in this, I want to invest in that. In fact, I want to touch on that for 30 seconds. Everybody should have two portfolios, by the way. Your trading portfolio and your investment portfolio. This is a pro tip. They're not the same. What you want to invest in long term in your Roth IRA or your IRA or whatever your stocks are, that's your investment portfolio. That's your prediction of the future on what you think is going to grow, right? But your trading portfolio, that's totally different because you got different degrees of trading. You got scalp trading, which is short term, which technicals are super duper important. Somebody asked me in the chat earlier about Josh's scalp trades. Well, they're not made to be used on a monthly basis. That's why he delivers them on a daily basis. It's for trading micro trades in the beginning of the morning market or in the middle of the day. What Mary's giving you are the 200, the 50, the 20, and the 9 EMA. These can be used in many different circumstances, whether it's you're trying to play something for the week, like I'm doing Tesla, which I got out of the weekly calls for this week, by the way. I took my profits. I still think it could run, but I'm not taking a chance. We just had a huge run up. Why throw that money on the table and risk it? That's Mary's advice, by the way. She gave it to me 2 weeks ago. So, like I took it off. I made a tremendous amount of money. What? I'll go in another trade. The market will always give you another trade. There's another trade every day. You don't have to FOMO in. You can
So
miss out
wait,
on a trade.
Tamir, did you exit your position?
I did. I exited everything in the short term. I have a swing trade on Tesla that's different and a leap on Tesla, but all my short-term Tesla position, I exited. I ran it up from 222 all the way. I didn't even go all the way, 422. I didn't even go all the way to the top. I got out at 440 mostly. I think I kept like two runners and then I said, I don't even want to watch it. Because you also have, guys, emotional capital. Emotional capital. You're not going to have the energy to deal with the ups and downs all day long. You're going to lose your energy and it's going to change the trader that you are. You're going to find yourself exiting a trade happy and then getting back in and then losing money and then feeling bad. And then you're just going to lose your emotional capital. And once that's depleted, you're not going to be the same trader. You're not going to have a trade plan. You're going to be making mistakes and you're going to go home very, very upset with your family. It's going to ruin your relationship. So don't do that. Don't do that. Trade responsibly, create a trade plan, learn technicals, and learn how to not, get emotional about everything. You give yourself, even Josh in the morning, he goes, I made my third trade, I'm done. Well, you would say, well, Josh, aren't you a pro? Don't you know how to trade all day? Why don't you just trade all day? Because nobody has the emotional capital to do this all day. I don't care who you are. You're going to drain yourself dry. If any of you have sat at a screen like this, waiting for the number to hit the number you're expecting, and then it's going down. Should I get in more? I don't know, am I losing? It's very bad. It drains you. So use the technical levels so you have a guide. Learn fundamentals and news so you know what's going on with the stocks, right? And have a trade plan. You decide how much you're going to trade with, what you're going to go in with every trade. I recommend all beginners have the same amount on every trade and you pick no more than 3 tickers and you don't FOMO in. That's just my advice.
Adam said, Tamir, your energy is awesome. I'm pumped straight. Yeah, Tamir for 4 o'clock in the morning. He's so hyped up.
I was up at 2 actually.
Oh,
I'm ready. I don't sleep much, guys. So
oh, sleep is important, Tamir, you know.
I get my
Health,
4.5 hours. You got to have at least one REM cycle.
health,
That's
health
that's
is
my
wealth.
rule.
Your health is wealth. All right, let's talk about UNH. UNH is one of my favorite stocks that I actually gave the Discord a buy signal when it was dipping and everybody was freaking out, basically scared. And I said, this is a good entry. We give, I think if I'm not mistaken, like 248 was my entry that I start giving everybody. It actually started with like $294 to 275. And I keep saying this. His name is Raja. He's one of my students. And he's the one, every time I say buy the dip, this is a good buying opportunity. And he's the only one that I've noticed that he's the one who keeps buying and listening to my technical. And I guarantee you, I'm sure he made so much money. I'm sure he will not exit out, but he said he's an investor. So 381, imagine from here, literally from the bottom to the top, that is a lot of profit. But anyways, let's go ahead and talk about UNH, right? Who's investing in UNH? Warren, right? Mr. Warren Buffett. He is investing on UNH.
And Michael Burry, by the way, which took a
Michael
massive
Burry.
short position
Michael.
against Tesla this week.
Uh-huh.
But he's also in it, which speaks volumes, by the way, that a guy that shorts the whole market and Warren Buffett that exited Apple and all his positions both got into this name. And they're at a much lower, higher dollar cost average price than it's at now, just so you guys know. It's not about that. They believe in the company. UNH, what was it, over 600 at one point, right? Right.
Yeah, that was actually their average price. So slowly climbing in. I do like UNH. This pullback was a healthy pullback. So let's go ahead and learn that retracement again that we've been teaching pretty much. Even Josh had taught, I actually taught this before. And if we measure that retracement, and we pretty have a good pullback about 50% after the rally, it pulls back 50%, right? And this is actually a good buying opportunity. As you can see, this is a rejection. This is a price action. We call this price action. When you start seeing a wick reacting, what does that mean? Oh, there's a buyer coming in and trying to push it, but the seller is right there too, trying to push that price at the same time. So when you see a doji, it means the bears and the bulls are trying to fight. But at the same time, yes, the seller wins here, but the buyers continue to push higher, push higher. The seller did not even reach all the way down here, which is good. It's still okay. Even if it pulls back here, half of this candle is still a good pullback, but it did not. There's buyers in here. There's buyers coming in here. So this is actually a pretty nice rejection candle with a doji, and I like the candle that it is above the doji. So when you're trading a doji, this is one of the most important technical technique, okay? Strategy, I might say. If you see a doji, when the body of the candle, the second candle, when the body of the candle opens above the doji, the body of the doji, technically the doji has no body, but whatever that, the little stick on top of when the body of the candle, the second candle, open above that, that
The
is
wick.
bullish. That is a bullish. This is the wick, and this is the little stick on the middle. When the body of the candle opens above that wick on the bottom, that's bullish. So that continuation to the upside, and this is another bullish candle, right? So we are technically on the local resistance, which is at 340 to 343 is your resistance. Break out of that resistance. We're gonna have to do layers by layers on UNH, okay? Break out of that 343, we're gonna see that 350, 352 as your second resistance. And then another resistance lies on that 363 to 365 all the way to 380, back to that 380. It looks like it wants to climb up there, by the way. For me, we establish a higher low but we still need to climb higher. We still need to create a higher high, and we haven't established a new higher high. And you know where's the higher high? Is really all the way here, right? So we really fall down, establish the support, break out of this resistance, retest that resistance, which becomes the support. Once the resistance becomes the support, it's a buying opportunity, right? This is your second pullback that if you miss the bottom, you rally, you pull back, this is a good buying opportunity. Hopefully, we will surpass this candle right here. This is where the resistance is. Hopefully, we will surpass that big candle and we can retest all the way up here, right? So that's just a weekly candle. And our RSI is still 49, so it's not much bullish. The bullish RSIs normally rise above 60. 50 is okay, but above 60 will give me more like a strong or a strength of more buyers and momentum to the upside. Above 60 RSI, I do like it. Not 59, but 60. Okay, on the daily. On the daily, we had this. Do you guys see the pattern on the daily? What is it?
What was that?
It's not a W. Well, you could say a W, but it's not a W. We do have the inverse head and shoulder, which is a bullish signal, right? And we are really on the neckline of the inverse head and shoulder. And once again, this is your first shoulder. This is your highest peak, which is your head, and your second shoulder. And look at your second shoulder. Your second shoulder is higher than the lowest one. Another strong inverse head and shoulder, right? A breakout of that will confirm the trade. And you know what? This is actually a pretty good swing, by the way, right? This is a pretty good swing. So break out of that resistance. So this is your resistance in here. That's technically the 340, 339, or 342, all the way here to the top of the wick. That will be your resistance. If we open above that, that will be bullish. And do you know where's your first take profit level? You could test here. Let's see. Sometimes the leg is right here. The market is messy and noisy. We would like to touch all the way to the leg too, right? But in a perfect world, yes, we would love to get that. But market is noisy. Sometimes it will not give you that top level resistance. So that's the reason why you need to know where's your take profit level 1, take profit number 2, take profit number 3, right? Because sometimes it can reach there and break out of it, but most of the time, since the market is choppy, it could just give you this take profit level 1 and then reject it, and then it goes up, or sometimes it will not even touch it because it will just vacillate from here. So you need to make sure when you enter a trade, if you're trading this inverse head and shoulder, know when to exit. Okay, this is a good buying opportunity if we break out of that 342 or at least 343 on the daily, okay? So we need to break out about 343 on the daily. Above 343 confirms your trade. So let me give you an exact number. I love UNH, by the way. I think this is one of the buying opportunity. If you guys missed it, it hasn't rallied up. It's just a second buying opportunity when you miss your dip. This is the second buying opportunity on the daily chart. So yep, 343. So we need to break above 343. If we open above 343 tomorrow, great, but we want to see a candle above that 343, and then your first take profit level lies on that 350. Yeah, so it's about $7, right? That's a short swing, it's pretty good. Or you could do options, but you really need to wait for a full confirmation of that neckline using the daily chart, okay? After that 350, you're going to see a little bit of a hurdle, where first you're going to see a hurdle on that 360 as well. So 350 to 360, all the way to 366. So that will be your second resistance, and your top resistance lies on that 381. Of course, you're going to have a little bit of a struggle as well in 372, 376 to 381. So that is your second leg. That completes your inverse head and shoulder. But looking at the weekly, if we create a new higher high after that 380 or 381, your resistance will be about 394 to 404. And it looks like it wants to push higher than that. A full confirmation of that is when we see our RSI going above 60, your MACD is slowly going above the zero, but once we hit that MACD, that blue line crosses above zero, and your orange line, which is your signal, once you start hitting that zero, we may anticipate a pullback. When the orange try to touch the zero, we normally do a pullback. Okay, on the daily is looking good. I just wait for confirmation of that. So let's take a look at the EMAs. All right, there comes your 50 MA. So your neckline, what did we say? Your neckline is about 343, and your 50 EMAs happen to be 342.78. Come on, round it up, 343, right? So it's really important. We need to reclaim that 50 EMA. So once we break out of that 50 EMA and we reclaim back that 50 EMA, so UNH could be bullish, right? But the goal is what? We need to be above 200. Once we see 200 EMA and we trade above 200 EMA, we can see UNH start flying up. This is my top resistance as of right now. If we break this resistance, so that's about like 428, 430. But I'm seeing UNH, if we get out of that, if we surpass that 50 EMA and then 200 EMA, then obviously you get that 380 all the way to that $400.
By the way, do you guys realize when you're looking at a chart that's coming, from a bearish move back to a bullish move versus a bullish move where you're thinking about a bearish move, somewhat those things are inversed, right? When you're in a bull chart that's been screaming, the 200 is all the way down here, right? But because we're coming out of a move where it took a big dip, now we got to reclaim the 200, right? So before we reclaim the 200, and it's not always exactly in that order, but we're reclaiming the 50. So what she's telling you are the levels, right? And this is what I was saying before. When you're trading, you need to know this when no one's around, how to pull this up on your chart, and you're not sure you're in a position. You're asking on the chat, oh, hey, should I exit? No, you should look at it yourself. And when it reaches another level, you can raise your stop loss, right? It's a whole nother conversation, what percentage stop loss to put, all that I'm not going to get into now, but you can raise your stop loss as it's climbing levels. That way, you have profits in the back of your head already taken, right? Covered. And then it goes up a little bit more. You raise your stop a little bit more. Now you're more profitable. But if it breaks, you go to the bathroom or you eat lunch and you're not watching it and it breaks that level, you get stopped out and your money goes right in your account, right? You don't lose money. So the levels are important. And like Mary said, it's important to look at the daily candles so you can see the range of a stock that's going to move in a day or two, right? Because that's often where you might want to place, certain risk levels, right? Tesla moves $10 in a day. So if you set a $2 stop on Tesla, you'll probably get stopped out 37 times in a day. It's you're not gonna, you can't set a stop on $2 on a $10 move, right? UNH is climbing now, has to hold the level she mentioned, has to keep climbing, regain the 50, but really for it to show strength, it needs to regain the 200-day moving average. Then, like she's saying, it's a much stronger position when it holds that level.
Yeah, so just a little bit of recap. That 360 is actually aligned with our 200 EMA. So that 200 EMA is going to be a resistance. Candles is going to react. You could see my dog. Candle is going to react on the 200 EMAs. But once we surpasses that 260 EMAs, this 380 is guaranteed. Like, because you know why? We haven't break out of the 200 EMA since we fell. when we fell down, we haven't reclaimed that 200 EMA. So it's really critical to reclaim back that 200 EMA on the daily so that we could start seeing same thing with this one. So once we start seeing a reclaim of that 200 EMA on that 380, 360, and then the second hurdle will lie on that 50 EMA, which is your 383 level right here. So the goal is to surpass the 200 EMA on the daily and surpasses 50 EMA on the weekly. Okay, because we haven't seen that. It doesn't matter if you're my students, I always teach you guys that it doesn't matter how far the candle moves away from the 50. For some reason, the 50 EMA has a gravitational force where the candles will pulse back and retouch that 50. So, and hopefully we will regain that 50 back sooner or later. And it always touch. Doesn't matter. Look at this. Doesn't matter how further the candle goes, it always retouch. Doesn't matter how further it goes, it always retouch. It always retouch. Some point in time, it will retouch and cross. It's just a matter of time. So hopefully we'll break out of that 360, then 383, then it will be more bullish. Then we'll talk more what's going to be the resistance once we break out that 383 or 385.
Now,
Okay,
guys, try to understand, like, just, first grade, right? 200-day moving average, right? That's it. Think about it. Its range is 200 days. So if you're going into a swing trade, right? It's a very important level because it's ranging 200 days. If you're going into a scalp trade, you're going to want to look at Josh's scalp trade sheet, right? Because it's a more micro levels because you're just trading for the day. Obviously, the 200 is important, but are you going to go back $50 on something that moves $6 in a day? Probably not, right? So each level is important depending. I mean, it's always important, but it's more important depending on the range of your trade, right? So when you have a trade plan, if you say, I'm looking to get into Amazon if it holds above 232. What's the next level up? I see the next level up is, I'm not saying this is what it is, 240. So you have an $8 range. So you do the math on the cost of the contract or stock you're buying and where you're starting and where you want to end up. How long do you want to be in the trade for? If you want to be in the trade for a day or two, well, the time decay is not as important. But if you want to be in the trade for the week and it's Monday, the time decay is going to become more important as you get towards the end of the week. And what the daily candles are is going to be very important to see your range. The 9 EMA is going to be extremely important when you're trading short-term time frames. That's why you always hear it's bouncing off the 9, right? In scalp trading, we just bounced off of the 9. For years, I had no idea what people were talking about when they said that. And like, it's bouncing off of the 9-day moving average, right? So, you don't hear it's bouncing off the 200 as often as you hear it's bouncing off the 9 on the same day. Now, Mary's showing you a chart where UNH is sitting right now below the 50-day moving average because it's been climbing a little bit and it's getting back to the average that it was over the last 50 days. It was below the average. It was below. It was in bearish territory. It took a nosedive. Now it's climbing back. It's going to regain the 50-day moving average. And if it holds that level of resistance, will become support, right? And if that becomes support, right, then the next level to really bring it into bull territory would be for it to reclaim the 200-day moving average. And then that level of resistance becomes support. And now you're in bull territory. Now, how high the bulls go depend on a lot of factors. None of us determine any of those factors. When you jump into the sea, you don't determine how big the waves are going to be and when they're going to come tomorrow. You just know that today the waves are big or today the waves are small and you're making your moves, right? Same thing in the stock market. You know based on volatility what the size of the waves are going to be, based on the daily candles, based on each ocean, right? So I like to use the VIX also to look at and see what the range of motion is. Right now, we've been in very high volatile territory. The VIX was as high as 27 in recent, months, weeks. And now it dropped in the last month 6%, in the last 5 days 11%, down to $16. What does that mean? That means that the percentage swing for the whole market is smaller than it was when it was 20, right? It's not going to move as much. So this volatility is balancing out. Doesn't mean that the ticker you're trading is not volatile. It just means as an average, right? For the market. So it's S&P really. So that's what you need to, pay attention to. You got to really mark these things on your charts, take notes, watch the session again, and keep learning it over and over until you get it. And we're obviously here for you for any questions. Any last minute questions before we close out, guys?
Yeah. The guy said, Mavin said, so it has to retest 344 first. Yes, that's your first hurdle. You want to break out of that neckline of the inverse head and shoulder, right? Because if you cannot break out of that neckline, obviously it's not going to go anywhere. It's going to go back test that support again. Okay, so
I have a
that's
question.
go ahead, Jason. Oh, it's Mr. Scotty, go ahead.
Yeah. Thank you so much for this. I really appreciate it. Miss Mary, I'm not getting the same number that you're getting like at the 200. So looking at UNH, I'm on TradingView. And so while you were given technicals, I have a couple different options for indicators, and each
Give me one
one,
second.
like my 200's coming in at 365.88.
Do you have the
then
daily chart up?
I
What
have the
chart do you
daily.
have?
I have a daily.
And you're sure it's the
this is
200? Because, you could have set the indicator wrong also. You can go into the indicator, make sure. That says that, but when you go into the settings here, like she's showing you right now, it'll show you which color,
Oh,
which indicator, you got the color, the style, right?
see,
so
I'm not
these
using that one there. I've got EMA 20, 50, 100, 200, and then I've got EMA trend table, which Money
I'm
Mike
using
is.
MA.
He's
I'm
using
Wait,
MA.
we
third
got Money
party.
Mike in the show,
Yeah.
guys.
Oh,
Listen
there's
to Money
Mike.
Mike over here.
Oh, I
Scotty,
had a
Michael.
session with Mike. Hey, Mike.
What's he's using a third party setting, I'd say.
yeah.
A third
So
party EMA probably.
So
I'm using a
I've got two of them, and they're both operating in the same zone. I've got Mike. I've got that EMA trend table and RTH high low with labels that you turned me on to, and it comes in identically at the same place. My level at the 200 is 365.88 or 80.
You have
Should it
after
be
hour
SMA?
enabled.
Should it be SMA?
I'm so sorry. So sorry. Go ahead. That's actually this is just a regular SMA, guys. See,
so
this is a
Not
maybe I'm.
EMA.
And are we
Yeah.
no. This is a regular MA. This is a simple moving averages.
He's using not
Right,
an
not the
exponential.
EMA.
Mm-hmm.
It's not EMA.
No, it's not an EMA. This is my EMA for that. So you see how far it is. I mean, it's pretty close enough. 360, 64. It's still, even if your EMA, it should be close enough.
My EMA is 365.80. And I was
Oh,
just wondering if I have something set wrong.
Your
no,
after
no,
hour
You
after
may
hour may not be enabled.
Yeah, after hours doesn't work on daily time frames anyway.
Exactly. Yep. There's really only
You
after
you
hours.
may want to consider removing that one indicator and then adding each EMA separately, Scott. Just
Okay.
adding the exponential moving average exponential one at a time and creating the length for it.
How many indicators do you have, Scotty? How many are you allowed to use?
I've got probably 7 up right now.
Okay. So if you want, you could just
I've got Lux Algo too, but I'm not using it.
okay. How many indicators are you allowed to use?
I haven't messed with them, Mary. So
No
how would
worries.
I know that?
So go ahead and go check the indicators. Go use 3 MAs and you get to pick 50, 100, and 200. Go use the indicators, type in 3 EMAs.
3?
Yeah, 3 MAs actually, excuse me.
3 MA. All right. So
And then go ahead and normally it says there input, go to settings, input, you're supposed to see like 50, 100, and 200.
so I need to grab this indicator though, right?
Yeah. Go to
So
indicators.
there's a couple options. I
Yeah.
got
Let me
Denar.
go. No, let me show it to you.
She'll show it on the screen. Everybody watch along. By the way, this is very important. Thanks for your help with this, Mike, too. He actually helped me get set up in TradingView when I
Yeah,
started as well.
Denar. Yeah.
So
Just use that
definitely
one.
worth a private session.
And then on that 3 MAs and go to settings. It's nothing fancy. It's already done for you. Oops, that's not the right one. It's right here. Then you got 50, 100, and 200. And you don't even have to do anything. It's already defaulted for you.
Okay.
Always worth taking an hour with a pro and getting this set up. It's really like this is your core, you know?
So
I'm
you
gonna,
need just pretty good a good play perhaps to a long expirations. As long as we break out about 343 on the daily, we have to break out of that 343, confirms the trade and confirms the neckline. Your first resistance is about that 360, which
it's
will
there now, Mary. It is
huh?
there with this indicator. It is where yours is.
Okay.
Boom.
So
Yep.
so yeah, for my EMAs, I have 8, 13, 21, or I could use 9 and 20, right? And then my longer MAs, I just keep it as MAs.
So
And
when you
there's
mentioned
nothing wrong with that. There's nothing wrong with using 50, 100, 200 EMAs. There's really nothing wrong with that. It's just how you do it. It's how you get used to your strategy, right? There's nothing better than the other one. It's your strategy. Okay.
yeah, I was just trying to follow along with y'all.
Sure.
And so like, well, my indicator's not looking like yours. And so I work full time. So I only get to dabble with this,
Yeah.
here and there. And when I'm not sticking with it, like Tamir had said, like following Tesla every day and learning, I can't because I get so involved in work that I can't follow this. And so then I get behind and then I get lost and I forget and then we revisit. And so,
So Scotty, I think you should be like a swing trader. So if you are busy with work, normally a scalp trader is like starts from like 9 o'clock, 9:30 to 11, right? So if you want to be a scalper, you gotta have to set time for that. And everything, your personality and your schedule defines what kind of traders are you. So if you don't have time to scalp, you're going to be a swing trader. Meaning with that is you wait for a confirmation if there's any kind of breakout on the support or resistance or breakout on the EMAs or patterns, then that's when you enter a trade. But for scalping, if you are not watching that bad boys, I highly suggest you stay away from those type of trades,
yeah,
okay?
I failed at that.
That is
So,
Yeah.
such good advice, Mary. Listen,
Yeah.
everybody's got to identify the kind of trader you are. If you start
Yeah.
trading in daily trading and then you can't make it and then you go looking at the screen, you lost money, it'll ruin you. You really got to know and set a schedule. Like I have a schedule now. It took me months to get into place properly because I also have multiple businesses that I manage and do things. I have a schedule now where I scalp trade in the morning, sometimes with Mary, sometimes with Mike, sometimes with Josh, and because I like to be in the team, sometimes on my own. But I do it for a period of time. I set aside a few days a week for 30 minutes in the morning. Sometimes I do the evening, not as much anymore because it's a different market, right? Evening trades are, the theta doesn't matter as much if you're trading options and things like that. And I like long-term plays on dips like leaps, so I don't have to think about it because I like to be in certain names and I sometimes can't resist, right? So instead of risking money in the short term, I'll buy on a dip, something like UNH, for example. I would buy a leap if I didn't want to watch it every day, or you just buy the stock, right? If you like something, you dollar cost average in. But very important to measure your time frame. Are you trading for the week? Do you have 2 hours a week? Do you have 3 hours a week? Do you have 3 hours a month? And you have to hone your skills. If you don't make time for it, Scotty, and all you guys, if you don't make time to literally create your trading schedule, it's going to create you. And you don't want that. You need to take control of it and have your trade plan clear. So you go in, you do your thing, and you leave. Guys, we got to put an end to the session. Anybody that wants to join us on the I put the link in the description for our
Boom,
group
baby.
class. There's only 20 spots for level 1. My man Mike, thanks for joining us.
Love you,
I love
buddy.
you all. Really, it's
Thank
a
you,
lot of
Mike.
fun.
Thank you for
Me and
being here.
Mary love delivering this information. We really enjoy. We want to see you guys get better though. So we don't want to see the same questions popping up. You got to really put the time in and take yourself to the next level. Get your charts set up properly with one of our, pros. Get yourself going, on a schedule. Figure out what kind of trader you are. Learn your fundamentals, learn your technicals, and then come back to us for level 2. You know what I mean?
Thank you, guys. Great night. Have a great night, Michael. Thank you for being here.
Thanks,
Tamir,
Miss Mary.
thank you so much. Good luck tomorrow. Hopefully, we have green days.
Yes,
Yeah.
yes, guys.
Time to go home.
Thank you,
Time
Boom,
guys.
baby.
to stack. I've been with you guys since this morning.
Long
My
day.
husband is waiting for me. He was like, "Hon, when are you gonna be over?" I'm done.
Tell him to have dinner ready, Mary.
Dinner is already done. All I
I'm
gotta
about
do
to
is
get my
wash
kids
dishes.
ready for school. It's
Yeah.
5:50 a.m. right now. I'm about to not wake up my wife, go home, prepare all their lunches, get them off, and then go sit in my backyard and have a glass of wine in the morning.
Nice, nice, nice. Good life. Well, thank you guys. Have a great night. Samir, I gotta go. Mike, have
All
a
right,
great
take care,
Good
guys.
night, traders. I'll see you tomorrow.
Thanks, everyone.
I'm going to put the link in, guys.